central banks have shown over the last 3 years buying 1,000 tons of gold a year on average over the last 3 years. They've basically shown that they don't care about what the price is. They just want more gold. And there's a good reason to want more gold. And that is, we've seen a certain weaponization of the dollar. And it doesn't really matter whether you're friends or enemies with the United States. You've got to think, what if I suddenly can't get my hands on, or I can't deploy my dollars for some reason? There's been a lot of surprises in the last. The size of the move that we've seen has been unprecedented. Having said that, unlike the bull market we saw when the Hunt brothers were buying silver and took it up to $50 back in I think the early 80s or late 70s, which was a speculative mania, this one is driven by fundamentals. We're seeing, we've seen for the last 5 years a deficit in mine production compared with the industrial demand. And that industrial demand is set to increase, partly from electric vehicles, where the amount of silver required is about double what you need for a conventional combustion engine. And of course, we've got an accelerating move towards solar panels, which also are big consumers of silver. So there's quite a large deficit in silver, and the only way to suck out that deficit is through higher prices. But obviously those prices have moved very fast, and that kind of makes it, at least in the short run, kind of speculative. It doesn't mean to say that the bull market is over, not at all. But often when these things happen, you do get a sharp and unexpected pullback before the bull market can resume and go to another all-time high. But if we were to take the speculative boom of the Hunt brothers, and I think there was another one a bit later, which wasn't so much speculative, but both of them took silver to around $50, and so this time we've gone to $50. But if we adjust it for inflation, the figure I've heard quoted, and I haven't double-checked myself, is we'd have to go to $180 this time around to kind of make a peak similar to the ones we've had before. So, when you have large bull markets like this, they can often overshoot. So I'd be a fool if I said it's going to turn around tomorrow. I'm not saying that. It could easily shoot up again tomorrow or the day after. But at some point, when you've got this sort of move, there has to be a pullback. And I think from here on, it's not so much of a steady rise as we have perhaps seen over the last few years. We now go into a phase where the moves are more violent, perhaps 2 steps forwards, 1.5 steps back, 2 steps forwards, 1.5 steps back. And of course, if you're a person who doesn't feel he's got enough silver, the way to play the game is to ease in gently a little bit now, which is painful because you're buying at the all-time high, but keep some in reserve so you can buy some perhaps in 10 days or 30 days time. Might be higher, might be lower, but either way, you can't be sad that you paid everything at the highest price.
Silver has transformed from a traditional monetary metal into an industrial powerhouse. Electric vehicle manufacturers now require roughly twice as much silver per unit as gasoline-powered cars, accelerating consumption at a pace the mining sector cannot easily match. Meanwhile, solar panel production, already booming, continues to expand as nations race toward renewable energy targets. According to analysts, photovoltaic demand alone may reach record levels by 2026. This combination of electrification and green energy adoption is tightening available supply, forcing the market to reconcile with years of undersupply. Higher prices are becoming the natural mechanism to attract recycled material and balance the system.
Well, first of all, I haven't studied the entire market as I did 3 or 4 months ago when I did that video that you have to buy silver miners. But I have been looking in the last few days at a number of the silver miners and revaluing them. The ones I looked at, I consider still to be very undervalued at today's silver price. I would say they're probably pricing at a silver price of $25 at the moment, not $50, or now we're $54, $57, aren't we? So if this price holds, and I think we'll have the up and down, but I think there's a floor in the range of 45 to 55 at the moment, and then we move up into the higher levels. But let's assume that range holds. Those silver miners are going to be on extremely or very low price earnings multiples next year, when we're talking about the 2026 profits, with probably a higher price than today's price. So in a doubling of the silver price from 25 to 50 doesn't mean to say the shares double. It means they do a lot more than doubling. So when I did my calculations on a number of silver miners, they all look like they got many multiples higher to go. And and you asked me to name some of them. Well, there's a lot I like. There's Majestic Silver, there's Pan American Silver, there's Silvercrest, Heckler. And by the way, I don't own many of these. I own one or two of them. Discovery Silver, Andean Precious Metals, which is gold and silver. Kingsgate Consolidated, gold and silver. Silver X is one of my favorites. It's a fairly new producer, but it's got a very, very leveraged upside. That's been one of the best performers, but I think it's going to be an absolutely phenomenal performer going forwards. And this is not investment advice. It's just my personal opinion. I've done my maths my way with my assumptions about what the silver price was. And when I did the maths, I assumed the silver price would be $50 in 2027. That's a rather conservative estimate. It could be a lot higher, but I used a $50 price and worked out what will the earnings of these companies be in 2027. And if the earnings are that, and I put a price earnings ratio, a modest price earnings ratio, by the way, I used 10 times on these companies, where do I think the share price will be? Then I compare that share price with what it is now, and there's many multiples upside. Another one which I particularly like is called Silver Corp. That's a particularly good one. But you can't really go wrong if you buy the silver mining ETFs or the silver junior minings ETF. At this point, I'd probably go for the mainstream silver miners rather than the juniors, even though the juniors potentially have I'm going to say, like, lots of juniors have huge upside. The problem is lots do not, because they're going to run out of cash. So if you're buying individual companies, and this is what I would recommend to anyone who's trying to buy silver miners, unless they really, really know what they're doing, and I would say I know enough about juniors, but unless you really know what you're doing, you should stick with the majors and the ones which are either already producing or just starting to produce. Then you know what's coming out of the ground. You can do some maths on that. You can look at how many ounces they're producing, and they say they'll produce. You can look at what the silver price is, what you think they'll get, and that's your number. You can put $50, $70, $20, whatever you like. And then you look at the cost per ounce coming out of the ground. And now you have a gross profit before other expenses. The other expenses are easy to see on the website, just deduct them. And you now have net earnings, divide that by the number of shares, and you've got an earnings per share. Multiply that earnings per share by the multiple that you want. I use 10 times, but lots of people might use 15 or 20 times. And you get to a future share price. If you can't do it yourself, get AI to do it for you. There's some very good AIs out there. Perplexity will do it. Grok will do it. Manus AI will do it. I'm guessing that ChatGPT will have a very good go at it, but ChatGPT, I'm finding, is sometimes a bit lazy and only does half the job, so I'm not really happy with it at the moment.
Despite long-term fundamentals pointing upward, silver rarely moves in a straight line. When momentum becomes overheated, sharp reversals can occur, even in strong bull markets. Historically, precious metal cycles include periods of violent surges followed by sudden corrections before the broader trend resumes. Analysts note that previous peaks around $50 would equate to roughly $180 when adjusted for today's inflation, suggesting significant headroom remains. Yet investors should expect jagged progress, powerful rallies, steep retracements, and renewed climbs. For those building positions, gradual accumulation allows participation without chasing extreme highs, especially in a market that increasingly behaves in 2 steps forward, 1 step back fashion.
The worst thing anyone can do is Google for companies with the word silver in it, because there are far more companies with the word silver in the name which are not making profits than there are companies making profits. So if you just Google for a list of companies with the word silver, you'll get a huge list of silver, inverted commas, silver companies. Yeah. And if you buy that collection, you're probably going to find that most of them aren't making any profits and probably never will. And many of them will run out of money before they dig up a hole. I've seen a number of estimates of the shortage of silver at the LBMA. One estimate said there's only 6 weeks supply ahead, and another one said there's 4 months. So that's quite a big difference. But the bottom line is, it does seem that silver inventories at the LBMA have been shrinking for years. And of course, what's left is going to be very much spoken for in terms of it's leased out or it's held by an institution which has no plans to ever sell it at any price. So when you have a situation like that, and if the demand continues to be higher than the supply coming in, and by the way, there has recently been a report, I haven't read into it, but a report of big shipments from America to London of silver. But if the supply is not coming in, you then get a kind of leveraged situation when people want silver, but it's in short supply because the leasing rates at one point I heard were up to 40% a year, which kind of means that people will say, you need silver? Borrow it from us and we'll charge you a lot of money. So it kind of implies that there were some real problems at the LBMA. But one of the funny things about if you have a high leasing rate, silver will flow in, because people say, I want to take advantage of it. So I don't know that it's the end of the game for LBMA, but what is clear is there's a shortage of silver in the market across the board. That's absolutely clear. There's no doubt about it. And that's why the price is going higher, and it has to go higher to suck out the recycled silver, because if you didn't have recycled silver, there wouldn't be enough to go around.
The mining sector often amplifies moves in the underlying metal. And today, many silver producers appear priced far below present market conditions. Several companies still trade as if silver were $25, not above $50. When metal prices rise, miners can experience magnified earnings growth, pushing valuations rapidly higher. Established producers such as First Majestic, Pan American Silver, Silvercrest, and Hecla often offer stronger stability, while select emerging names show extreme upside potential. However, junior miners carry higher failure risk, particularly when cash reserves run thin. For most investors, diversified ETFs or major producers provide a safer path to benefit from rising silver.
Well, I'll tell you what I think in a second, but let's just start by saying it's never a great idea to trade a conspiracy theory.
Yeah.
So now, in this case, it obviously was rather convenient that things broke down just at the high point, just as it was hitting a peak. And in a way, one could say that maybe gave the shorts some kind of breathing space to figure out what they're going to do without getting margin calls while the silver price was hitting all-time highs. So they can't send out a margin call in the middle of the day or think about a margin call if there's no price to make a margin call. But what we did see, which was quite interesting, during the period when the shorts could no longer roll over their shorts or do whatever, or initiate new shorts, the spot price rose sharply. I think it went up by 5.7% on the day. So in one sense, that kind of shows us what the real supply and demand might be if it weren't for what everyone suspects is market manipulation. And I want to stress, I'm not part of the conspiracy group. I don't really believe that there's market manipulation going on, but I have to accept that it is a possibility. But I think this overheating was just convenient and not necessarily sinister. But what causes overheating? Why that day and why not any other day? I don't know. There's got to be a nagging suspicion, but I'll put it down to randomness.
Silver inventories at major exchanges have steadily declined for years, creating growing concern about the depth of available supply. Estimates vary, but some reports suggest only weeks, or at best a few months, of unspoken-for physical metal remain accessible. Leasing rates have climbed sharply at times, signaling intense demand for limited stock. Short-term market distortions, whether from technical issues or disrupted trading sessions, highlight how fragile the balance has become. While conspiracy theories frequently emerge in such environments, the underlying reality is clear. Global demand continues to outpace new supply. Increasingly, recycled silver is essential to avoiding outright shortages.
Well, I certainly don't think we're at the end or even the middle of it. I think this is late beginning. In terms of what's driving it, well, we've got a lot of things driving it at the moment. Some of them have been around for a few years, and some of them are relatively new. We've got the fiscal deficits in the United States. And let's face it, what happens in the United States is very important to the value of gold and silver, because the less confidence people have in the US dollar, the more they're going to look for alternatives. And at the moment, there doesn't seem to be enough actions to address those deficits, which are set to be the largest ever on record this year. This year started in October. That's the fiscal year for the United States. So it's going to be at least 2 trillion of deficit, the highest ever. We've got lower rates coming from the Federal Reserve, or at least that's the opinion at the moment. Now that can change, because I know it's not 100% certain they'll lower rates in December. But the opinion at the moment is we still got lower rates coming. Then we've got central bank buying at record levels for the last 3 years. So central banks have shown over the last 3 years buying 1,000 tons of gold a year on average over the last 3 years. They've basically shown that they don't care about what the price is. They just want more gold. And there's a good reason to want more gold, and that is we've seen a certain weaponization of the dollar, and it doesn't really matter whether you're friends or enemies with the United States. You've got to think, what if I suddenly can't get my hands on, or I can't deploy my dollars for some reason? You know, there's been a lot of surprises in the last 11 months. If you know what I mean, surprises that people never saw coming, and a lot of seesaw, whipsawing back, they call it the taco thing, the taco trade. Trump always chickens that, but it's not really that. But the point is, you don't know where you stand from one day to the next. One day you've got a tariff, next day you don't, then you do, and then there's a retaliation from another country. So things are a bit chaotic when it comes to investing, and particularly relying on the dollar. So I think people are looking for something which can't be restricted. It can't go to zero. So in that respect, gold is coming in. So then we've got the geopolitical events going on. That's not new. Geopolitical events have always been there, but obviously people think that there's a heightened tension at the moment. And that, again, is a reason why people would want to lay their hands on gold. When I say people, I'm talking about countries. And a lot of the buying has been coming from third world countries, like China, Kazakhstan, Poland, those sort of things. I don't mean to be derogatory to call them third world countries. They call them not the Western countries, shall we say? That's kind of what I meant. So that's kind of where the buying is coming from. Countries which are maybe not, as of today, the greatest friends of the United States. They're not enemies either, particularly, but, they're just, well, maybe some of them are, but they're just sort of saying, let's get some just in case. But I think there's also something going to continue to drive it in the next few years, probably out to 2027, 28, 29. And that's the coming digitization of currencies. We've got, starting next year, the rollout, to start with, of the digital euro, and that will go fully live the year after that. Now, I don't want to go into too many details because it's a very, very long topic, but the long and short of it is, I think you better get your gold before you've got the digital euro arrives. I think that's my, if anyone wants to know why, look at my last video, but really get your get your real gold before the digital euro arrives, because you will perhaps find that you will no longer be able to deploy your assets in the way you want, your money in the bank in the way you want to.
Silver's rally unfolds against a backdrop of profound shifts in global finance. The U.S. faces record fiscal deficits exceeding $2 trillion, eroding long-term confidence in the dollar and encouraging investors to diversify into tangible assets. Central banks have been accumulating gold at historic levels for 3 consecutive years, signaling broad concern over currency stability. Meanwhile, geopolitical tensions and the accelerating rollout of digital currencies, such as the coming digital euro, have intensified interest in metals that cannot be censored or devalued. These trends suggest the current cycle is still in its early stages, with silver positioned to play a growing monetary role.